What is going on, guys? My name is Chase, and welcome back to Intelligent Money Investing. And now that we have officially dropped into bear market territory, I want to talk to you guys a little bit about what stocks I'm adding and what stocks a lot of money managers like Warren Buffett and the big conglomerate Berkshire Hathaway, I speculate they are buying right now at these low price levels. So today we're going to be going through a little bit of their mindset with this drop, a little bit of the total mindset that I'm seeing online and from a bunch of different like minded investors and what stocks that Berkshire Hathaway picked up in the third quarter of this year, and what stocks I think they're going to be picking up through the end of this fourth quarter. All right, so let's get right into this. We got a lot to talk about, but I want to start out just kind of talking about the general mindset of investors right now. And one of my favorite quotes that I really haven't had the time to exercise just because of opportunities in the market so far is Warren Buffett's "Be fearful when others are greedy, be greedy when others are fearful." This is something that I believe a lot of investors say they're going to go by when they get in their mindset. They're like, okay, oh, it's a great idea. When the market's down, I'm going to know exactly when to buy in. I'm going to buy in low. I'm going to be able to have the kind of the guts to do that when everybody's telling you to sell. Everybody's telling you it's the end of the world for the stock market. I'm going to have the guts to be able to buy in there, go against the general kind of thought process. And really, what this quote goes by is going against the entire general thought process, because when the market's going up, oh, everybody online saying, oh, it can't be stopped, can't be stopped, it's going to go up forever. When it's going down, everybody's like, all right, we're going to be in a bear market for the next 20 years. That's what people are telling me. And I see this a lot on Reddit. I see this a lot on my own Discord channel, and that's definitely something you guys should stop by and check out if you haven't already. It's a totally free thing, just a big chat room, a community of investors. You guys should definitely check out if you are a fan of the channel. So that's definitely just a practice that I believe a lot of people need to try and live by, and it's definitely something I'm trying to go by now because this is an opportunity, and I can guarantee you, and I'm really excited to see what Berkshire Hathaway has been doing in quarter four, but I can guarantee you that they are taking out a huge opportunity in this now bear market that we haven't seen in so many years with this big 20% drop. And now, another big thing is that another Buffett quote that I heard the other day when I was watching a video of his is that he doesn't know when to buy, but he absolutely knows what to buy. I'm kind of paraphrasing there, but that's really the gist of what he said. And with that, a lot of these companies that he's been picking up in the third quarter, I don't think is a terrible look for something for you to go do your own due diligence on and decide if you think it's an attractive price. Because a lot of these companies that you'll see here that I'm going to be talking about now, the stock prices are 15-20% down from where they were when Buffett was buying. And I'm sure that he's sizing up his positions as we speak, as this market drops down more and more. So let's get into this. I hope you guys enjoyed that little thought process. I know it might polarize some of you because a lot of you guys are those kind of more emotional investors that we are seeing, and a lot of you guys, and I'm not going to fault a lot of you guys because a lot of you guys have gone in with the strategy, got your puts in, got your shorts in this down market, and have made a lot of money that you're going to be able to invest back in. I'm more of I view myself as a long-term investor at least, and I don't really mess around with shorts or options as of now. I might add that in, but obviously that's not going to be a significant part of my portfolio ever. I'm really looking to invest in companies that I think are going to be solid for the long run and make a lot of money in the long run, and thereby pay me out and generate profits for me. So let's look through the companies that Berkshire Hathaway has been purchasing, some of their new stock positions, and kind of talk about what they've been doing lately. So in Q3, we know Apple is Berkshire Hathaway's biggest position as of now. They added 522,000 shares of Apple at about $187. This here shows the recent stock price, which the Motley Fool just picked out. Obviously, over an entire quarter, which they'd be adding, and they'd be adding every week, probably every day, honestly, at different prices. So recent stock price just shows around the end of the time period, but really that is not an exact price where they bought in at. It's just a general guess. And obviously, Apple's much lower than this now. And with this big position, I think they really buy into the thesis that Apple's ecosystem is going to drive them the profits right now and beyond. And they have a huge cash pile right now. So the price to book value on Apple isn't terrible compared to its competitors. I really think that's a strong company going forward. I did recently pick up another share of Apple to add to my own personal portfolio. So we know another one of Berkshire Hathaway's huge positions is Bank of America. They're continuing to add to that position over 200 or almost 200 million more shares at around $28. And obviously with this bear market, I pretty much don't even need to tell you guys that so many of these stocks are incredibly down from where they are here. I believe Goldman Sachs is trading around 160 now. JP Morgan, I believe, is trading under 100. US Bancorp, I don't follow that one quite as much, but as you can see, 25 million shares added at around $55 a share. It's just incredible. And one thing to note about JP Morgan Chase is that it has a new position of Berkshire Hathaway, so they aren't just sizing up a position. They went out of their way and decided that JPM was a strong enough conviction buy that they're going to open up a new position. Not only do that, but put almost $4 billion into the company. And that's just an incredible nod of confidence, especially when you see Berkshire going out and picking up a new addition to their portfolio, because I believe they only have given the like about 40 stocks their stamp of approval as to what they're going to include in their publicly traded portfolio. So Bank of New York Mellon, they added another 13 million shares. Delta Airlines, if you guys didn't know, I believe I'm going to do a video about this in the future, but Buffett has a big play in airlines. I think he views them as the next like railroad stocks back in the day. I believe he believes that they're like so high up now that they really can't be competed with because of the intensive capital needs that people would need to break into that business. So really Delta is a pretty strong stock, very good service, and I don't see any competitors being able to knock them off in the future. And they are churning off cash, have a nice dividend, and it is one of the stocks that I personally have in my portfolio. They did also add Oracle to the portfolio, 41 million shares at about $50 per share. Another one that's new to the portfolio. The last few, there is a bunch of new ones to the portfolio. GM, they sized up their position a little bit. I remember their position being pretty small. I'm honestly surprised that they going into this right now, especially with the market going down a little bit. But that really shows that they have a lot of confidence in GM going forward, and it definitely might be one to consider, especially with the low PE multiples that the auto companies are trading at right now, minus Tesla. Yes, so and I'm sure you can also get a very good dividend on GM these days. So PNC Financials, one that they picked up at $134 a share for about roughly $134 a share. As I said, that is like just a general estimate for where they would have picked it up over the quarter, and they picked up over 6 million shares. These share amounts are exact in that because they have to file it legally, and I'm really interested to see. I believe these numbers came out in sometime last month, so they have to do these releases quarterly. So in about February, I'll be able to do another one of these videos and talk about what I believe I'm right on. So Travelers Companies, they also picked up shares of $123 a share about for 3.5 million shares. And StoneCo, I believe this is one of the this is an international company that they took a position in. I believe it was one of the smaller portfolio managers of Berkshire who went into this one. I'm really interested to see how that position turns out, but I know that that one's down pretty heavily right now. So overall, I believe that they're going to be widening their positions in a lot of these companies, especially the financial sector, because for me, I would love somebody to debate me about this in the comments, but I don't really understand why the financial stocks are going down so much when we know the rising rate with this rising rates environment. Like they will likely be able to make more revenue and profit going forward because they're going to be lending at higher rates. Because a lot of the time with the money they're managing, they're going to be able to not have to pass off the rising rates to their customers. So even though if the interest rates rise 0.5%, they might only raise the interest rates that their customers get by 0.2%, 0.1%, and then be able to take the rest of that as profit. So I'd love to get a good debate about that going in the comments if anybody has separate opinions or can give me the bear thesis on those bank stocks going forward, because Buffett seems to give them a strong nod of support. It's pretty much half of, I feel like it's about half of these that I'm talking about here, discussing here, that are those bank stocks that are likely going to, we're likely going to have interest rates rise far into the future. One of the other things I heard him say a long time ago is that historically our interest rates are extremely low right now, and it doesn't make sense for us not to get back to a higher normal level. And even though if it does hurt the economy, it's really kind of just people freaking out about what they think our interest rates are going to do in the future. Maybe people did a lot of buying a few months ago before the interest rates rose to try and get in there. But I believe we're going to see more and more rate rises in the future up until maybe we'll have sit around a 5%, 6% interest rate. Who knows really? Obviously that's just a complete guess as of now, but I wouldn't imagine we stay around 2, 3% for very long. But that's what I've got for you guys today. I really hope you enjoyed this video. If you did, please slap a like on this. Drop a comment telling me what you think about my whole thought process here. If I'm totally wrong, let me know. I'd love to talk to you guys about it in the comments. And other than that, hit subscribe if you haven't already, and I will see you in the next one. Thanks for watching.